Hi, I'm going to go through the transactions from problem 24A on page 64. In transaction, and notice that I've gone through every account and put debit and credit. All the assets, the drawing, and the expense accounts are plus minus accounts because they're ADE accounts. The liabilities, capital, and revenue are minus plus debit credit because they are part of the clear mode. And remember, when we get done, we want the debits to equal the credits. In transaction A, the owner deposited $18,000 in cash. So we're going to go to the cash account, and this is going to be labeled an A. And we're going to record that increase of $18,000. So here's our A debit. When you make an investment, it goes into the capital account. It's also going to be letter A. For $18,000. So notice that the debit to cash equals the credit to capital. When we look at letter B, they bought tables and chairs for cash, $625. So that would go down into furniture and fixtures. So I'm going to go down to furniture and fixtures, and that's the second transaction, so it's letter B. And when they did this, they bought it for cash. So cash is going down. This is transaction B, so it's a minus to cash. So here's our cash going down. Looking at letter C, we paid the rent for the current month, $750. So rent, expenses are going up. This is letter C on the plus side, and our cash is going down. So here's letter C on the credit side of cash. Looking at letter D, we bought washers and dryers for our cleaning business. We paid $16,500 down, paying $4,000 in cash and owing the rest. I'm going to pay the rest later. So washers and dryers are considered equipment for our business. So here's letter D showing our equipment getting bigger. Our cash is going down by $4,000, so we're going to go up here and record transaction D. So this is a credit. Now one more account is affected because we still owe $12,500. So we're going to go to accounts payable and also label it D and show that we are going to later pay $12,500. Going to letter E, we bought laundry supplies on account. So laundry supplies is going to go into the supplies expense account as a plus. So we're labeling that as transaction E. And this is on account. We have paid no money yet, so the amount that we owe is going up in transaction E. Looking at F, we sold services for cash, so our revenue account is getting bigger. So that's on the plus side. And our cash is getting bigger, so this is also on the plus side of cash. Okay, looking at letter G, we bought insurance for 1 year. We wrote a check. So we're prepaying. This is because it's for more than 1 month. So prepaid insurance is increasing. And our cash is decreasing in letter G. Looking at letter H, we paid on account to Forbes Equipment a creditor. So we're writing a check. The amount that we owe then is going to decrease. So we're going to record this payment on the minus side of accounts payable. And it's also making our cash decrease, so it's going on the minus side of cash. Looking at I, we received and paid the electric bill, $238. Our utility bill is going up because when we record expenses, they go up. And our cash is going down. Okay, looking at letter J, we paid on account to Wix Distributor a creditor. We wrote a check for $225. So our accounts payable is decreasing by the amount of our payment, and because we wrote a check, our cash is going down. Looking at letter K, we sold services to customers for cash for the second half of the month, $1,015. Our cash therefore is going up by that amount, and also our revenue account is going up by the same amount. Looking at letter L, we received and paid the bill for a business license. So this is something that is just going to go into miscellaneous expense. So this expense is getting bigger, so we have to debit it to make it get bigger. And our cash is getting smaller because we are spending our money. We're writing a check. Looking at letter M, we paid wages to an employee. So wages expense is going to be getting bigger. And letter M. And also in our cash is going to be getting smaller, so we have a debit and credit. Looking at letter M, personal use is involved. That's the drawing account. Before it had a zero balance, now it's going to have a balance of 700, so we have to record this on the plus side. And we're writing a check, so that's going down. Okay, once we've done all these transactions, we need to flip these accounts. So I'm drawing a line under my last one here, and that's going to be $19,887. And when I add up all of these, it's $80,478. That gives us a balance, a debit balance of $11,409. Anything that just has one entry, we don't have to do anything with. When we look at our accounts payable, we're drawing a line and we're adding together our two debits for a total of $725, adding our credits together, $13,005. The credit side is bigger, so therefore it has a credit balance of the difference, which is $12,290. Capital is okay the way it is, drawing is okay the way it is. Laundry revenue has two entries, so we have to draw a line and add those together. Our total revenue is $1,887, and I think everything else is just have one item. So we're going to stop this video right now.